If you are still obsessively memorizing the archaic candlestick patterns in 2026, you are essentially setting yourself up for failure. The market does not move simply because a pin bar or an engulfing candle appears on your screen. Those are merely surface-level designs. The true signal lies in what those patterns are concealing, who is currently being trapped, where liquidity has just been harvested, and whether the price action demonstrates genuine intent or is merely a hollow expansion. In this video, I am going to reveal the 5 things almost nobody understands about candles and show you how to utilize them correctly, as a tool for confirmation, not as a crystal ball for prediction. Introduction, experience and intent. For those new to the channel, my name is Brett Go. I've been navigating the markets for 7 years and recorded over $2 million in profits last year alone. Every single one of my trades is documented live on my second channel, Brett Trades. Beyond my own success, I have mentored hundreds of traders, helping them secure 6-figure funding. Currently, I am developing EdgeFlow, a trading super app designed to instill discipline and consistency. To be blunt, I am not interested in your money. My goal is to help you stop repeating the same amateur mistakes so you can actually become profitable. Let's get right into the core of the lesson. Level 1. The scoreboard analogy. Most traders mistakenly treat candlesticks like magic omens. Green means buy, red means sell. This is exactly why you find yourself buying right before a massive drop or selling just as the market begins to pump. The truth is that candles do not create the move. They are essentially the scoreboard that records the results after the battle has already taken place. A bullish candle does not guarantee that price will continue to rise. It simply indicates that during that specific time window, buyers managed to close the price higher than where it opened. They won a temporary tug of war against the sellers. If trading were as simple as following colors, everyone would be a millionaire. By the time a candle turns bright green, the move is often finished, and you are simply acting as the exit liquidity for the professionals. Level 2. The 5 truths. The auction story. The first dark truth is that every candlestick is an auction story. Imagine a literal tug of war. The open is where the game starts. The high and low represent how far each side managed to push the territory, and the close reveals who won that specific round. If you see a long wick, it represents a slapback, an area where one side tried to take control but was violently rejected. Furthermore, size matters. A large candle body, what I call the BBC, or Big Bullish Candle, represents high conviction and momentum with very little hesitation. Conversely, a small body indicates indecision and consolidation where neither side is winning the war. Level 3. Location is everything. The second truth is that candlesticks are completely irrelevant if they appear in the middle of nowhere. I view candlesticks like words in the English language. A single word like handsome means nothing until you put it into a sentence like, Brett is a handsome trader. In this analogy, the location is the sentence that provides the context. I only care about candles when they appear at specific high-value locations. Previous swing highs and lows, where price has already proven that participants are active. Supply and demand zones, the primary battlegrounds for bulls and bears. Liquidity pools, areas where retail stop losses are clustered, waiting to be hunted. If a scary candlestick forms in a random area of the chart, it's like someone shouting in an empty room. Nobody cares. But if that same candle forms at a major level, it's like shouting in a courtroom. Everyone stops to pay attention. Level 4. Reading the sequence, the movie versus the photo. The third truth is that you must read candles in a sequence, not as isolated snapshots. One candle is a word, but a string of 5 candles is a story. You should always analyze the last 3 to 5 candles together and ask yourself, are the closes getting progressively higher or lower? Are wicks being rejected repeatedly at the same price point? Are the candle bodies getting larger, growing momentum, or smaller, fading momentum? If you see 5 candles struggling to move lower, followed by one massive bullish candle that slams the market upward, that is the market telling you that the selling is over and an expansion is imminent. Don't look at a single photo. Watch the whole movie. Level 5. Context and relativity. The fourth truth is that patterns are useless without the before. The same bullish engulfing pattern can mean something totally different if the market is overextended versus if it just hit a major demand zone. You have to ask yourself, where did we just come from? Did we just sweep liquidity? Is this a trend continuation or a sign of exhaustion? Finally, the fifth truth is that candle size is relative, not absolute. A $50 move in Bitcoin is tiny when it's priced at $90,000, but it would be a monster candle if Bitcoin were priced at $500. Professional traders judge a candle's strength based on its neighborhood. We look for expansion, a candle 2 to 3 times larger than the previous 10. Contraction, small candles that signal the market is resting or indecisive. Average, consistent sizing that suggests a stable, ongoing trend. When a monster candle suddenly wakes up in a sleepy market, that is your signal that the next major expansion phase has begun. Stop memorizing patterns and start reading the story.